What's going on, everybody, and welcome to the video. In this one, we're going to be talking about a dividend stock that I actually just recently found. Been doing a lot of research onto it, and I think this could be a really good buy for just a lot of different people's portfolio. I currently do not own this stock, but it does look very promising, and I might be adding this into my portfolio very soon. But enough of that talk. Let's go ahead and get straight into what this stock is. And the stock is going to be Trinity Capital, ticker TRIN. Now, this company, just to kind of briefly overview what they are, they're a BDC, a business development company. They're a venture capital firm specializing in venture debt. So what they do, pretty simply put, is they give venture capital companies like these startups, okay? They provide them with money, and these venture capital firms, these startups, will pay them back in like loans, and usually there's a high interest rate. I believe TRIN Capital's average interest rate that they're making right now is about 13 to 15%. And what they do is they make this money and they expect the startups to pay them back either from getting actual venture capital funding and making equity in their company, or two, the startup starts to do really well and they pay them back. And so they have been doing really well recently. If we just go ahead and look at the company overview, they have a PE, a forward PE of 10.43, a yield of about 7%. The forward yield's about 8%. Market cap of just below $500 million, and short interest bears really aren't betting against this company because the short interest is just 0.1%. Now, looking overall at the company's dividends, they've been paying these pretty frequently for about a year now, growing every single quarter. They just increased their dividend 36 cents. We could see another dividend increase. It should be coming out very soon. But if we go ahead and look on their dividend scorecard, there's not much information on it right now, just because it's a little bit newer. But it says they have a payout ratio of about 85%, which is kind of close. We'll go ahead and look at the real one, do the math on that. But they have not announced their next dividend, so it should be coming up very soon, assuming it's quarterly. Last one was in December. It's March now, so keep your eye on that. But they went public in February of last year and provided more than $1.5 billion in funding and over 175 companies in their lifetime. Now, looking at these actual numbers, what we'll see is 186 companies have been funded, $1.6 billion in fundings, $937 million under management. A few of the companies they've invested in are like Impossible Foods, Super 73, a ton of different companies. Lucid Motors is a big name, at Axiom Space. You can just check this out. Look at all of these different names, okay? There's a ton of different companies that they're invested in right now and making money off of, quite simply put. So going ahead and looking at them, Morningstar is giving them an 8% discount, saying they should be valued about $19.69, which is just pretty good stuff. But earnings per share in the trailing 12 months has been about $4.64, and their forward dividend is about $1.44. That's a pretty low payout ratio, and their forward dividend yield is just below 8%, which is really good. And looking at the price targets, we're seeing 12% upside in the stock, relatively speaking. Now, looking on to just some statistics for the company, pretty undervalued. Forward PE of 10 is really, really low, and a trailing PE of 5 is really low. Profit margins, now this is a little bit questionable. I don't really think it's 160%, but these numbers are still very high, and this company is definitely generating profit. And especially over the long term, their cash flow is not necessarily the best right now. It's actually negative. It is one reason why I'm still sitting back wondering if it's the right bet for me to invest in this company right now. But I think that, relatively speaking, if they make the right investments and if they can fix their cash flow right now, this could be a gold. This could be like a hidden gem that could be really good for your portfolio. But I'm not a financial advisor, remember that. Revenue growth quarterly year over year is about 49%, and earnings growth is insane, 466%. Payout ratio of just like 36.5%, which is, like I said, really good stuff that we like to see. And they've had 131 exits since inception. What that means is they invest in a company and then they get their money back and everything like that. They've exited out that, and that's what provides this liquidity for this company and also gives them the capital to pay you dividends and great things like that. Now, looking on to kind of just some highlights from their Q4 of 2021, they should be coming out with Q1 of 2022 very soon. So make sure to stay tuned for that if you are interested in this stock, in this company. But the dividends on this is really nice. So they had a total investment income of about 23.6 million. If you just do simple math, about 23 times 4, that gets you about 92. I mean, you're seeing some pretty good turnover on revenue to market cap right now. 24% growth over the past year. That's really good, especially in the market that we're seeing right now. Now, one thing to keep in mind is interest rates. The core yield is about 13.2% and the effective yield is about 15.2%. But the main thing to keep in mind, that's another question that you don't want to just go into a stock and see only green flags. And I'm not saying this is necessarily a bad thing because it's more of an external factor, but interest rates right now. As interest rates are increasing, okay, money's going to be harder to get. And it's going to be harder for these companies to maybe want to take on this. Now, it could both benefit them and hurt them. As interest rates are going up, it could help them get higher interest rates, but money's not that accessible right now just because of different things going on in the economy. And so if you just have to take all aspects, and it could hurt them, but I don't think it's going to be that much of a negative thing because when you think about it, interest rates are increasing, but money's harder to get, so it might be harder for them to get new loans. You might be waiting on heavier interest rates and heavier clients and not as broad, so they might not see that growth. But keep that in mind, just one thing to question. But they did recently increase their dividend by 9.1%, which is really good. Their net investment income per share is about 39 cents, but they're paying out 36 cents per share, so that's a pretty tight payout ratio. But looking at their quarterly income statement, we're going to see some good numbers. Quarterly growth is incredible. Expenses kind of were pretty high over the last quarter, which makes sense that their payout ratio kind of on their dividends was a little tight. It's usually not like that, but this one expenses were a little bit higher. You can see interest expense, compensation and benefits, and G&A expenses were both a lot higher in everything, pretty much simply put. But looking on just kind of their business overview, their portfolio yields, the core yield is the orange one is kind of like the average yield. It's like what they're getting on average. We're seeing it fluctuate, but it's coming back up. It's about 13.2% right now for Q4 of 2021, been up to 13.7%. And different sources of investment income, like we'll see, most of it does come from loans and other investment debt. But what we're going to see is accelerated fees. We're also seeing equipment financing, things like that. But the majority of it is coming from their loans, which is kind of like their entire business model when you really think about it like that. And just to give you an overview of how their cash flow is looking right now, we'll see a year-over-year growth on that revenue is insane. But the cash flow, it's not the best, okay? Free cash flow is negative $160 million. That's not that great when your market cap is only $495 million, $500 million. So if they can fix this issue and figure that out, it's going to be very big. But a main thing that they're doing is repaying debt. So it's not absolutely the worst, but operating cash flow, not that great in the grand scheme of things. But institutions really like this company. I mean, they've been buying a ton of it. $131.76 million worth of money has been poured into this company, and only $8.53 million has been sold. Okay, and especially sitting on 24% gains this year for a while. I mean, this stock has been a little flat recently, but so have a lot of stocks. These are really good numbers that I really like to see. But that's going to wrap it up for this video. So if you did enjoy it, make sure to subscribe to the channel. So leave a comment below. I would like to hear you guys' input, do my best to respond, give you guys my input back. But again, thank you for making it to the end of this video. Subscribe if you're new to the channel. Check out M1 Finance using the link in the description or the pinned comment down below. You just click M1 Finance, use that link. I think the promotion right now is going for $50. So if you deposit $50 into that account, you'll get $50 back. It's free money. It's a win-win. You get $50. I get $50. It's incredible stuff. 100% ROI just from that. Make sure to check it out. I use M1 Finance. I think it's the best brokerage out there right now for dividend investors, dividend stocks, all that good stuff. But again, thank you for making it to the end of this video, and I will see you at the next one.